What if I told you that Warren Buffett, Jeff Bezos, and practically every millionaire investor owns the exact same 5 stocks? And what if I told you that you can buy these same wealth-building stocks with just $50? I spent months analyzing the portfolios of the world's richest investors, and I discovered something shocking. Despite having billions of dollars and access to exclusive investments, they keep buying the same 5 companies over and over again. My name is Your Name from Budget and Beyond, and today I'm going to reveal these 5 stocks that the ultra-wealthy use to stay wealthy. More importantly, I'll show you exactly how to buy them yourself, even if you're starting with almost nothing. By the end of this video, you will understand why billionaires keep these stocks for decades, and how you can use their exact strategy to build serious wealth. Let's dive in. Here's what most people don't understand about wealthy investors.
They're not making risky bets on the next hot stock. They're not day trading cryptocurrency.
They're doing something much simpler and much more profitable. They buy and hold companies that have 3 specific characteristics. First, these companies dominate their industries. Second, they generate massive amounts of cash year after year. Third, they have what Warren Buffett calls an economic moat, advantages that make them almost impossible to compete against. I analyzed the portfolios of the top 50 billionaire investors, including Warren Buffett, Charlie Munger, Ray Dalio, and others. Despite their different investing styles, they all own variations of the same core holdings. These aren't speculative picks. These are companies that have been making rich people richer for decades. And here's the best part. You can buy them through any investment app, with no minimum investment required. Let me show you exactly what these 5 stocks are, and why the ultra-wealthy consider them essential holdings. The first stock that practically every wealthy investor owns is Apple. But they're not buying Apple because they love iPhones. They're buying it because Apple is the most profitable company in human history. Here are the numbers that make billionaires excited about Apple. The company generates over $100 billion in profit every single year. That's more profit than most countries' entire economies. They have $165 billion in cash just sitting in the bank. And they return tens of billions to shareholders every year through dividends and stock buybacks. But here's why wealthy investors really love Apple: the ecosystem lock-in. Once you buy an iPhone, you're likely to buy AirPods, an Apple Watch, a MacBook, and subscribe to Apple services. The average iPhone user spends over $1,000 per year on Apple products and services. That's recurring revenue that competitors can't easily steal. Warren Buffett, who famously avoided technology stocks for decades, now has over 40% of Berkshire Hathaway's portfolio in Apple. He calls it his favorite stock and says he wishes he could own 100% of the company. The wealthy understand something about Apple that most people miss. This isn't just a phone company. It's a luxury brand with technology pricing power. Apple can charge premium prices because customers are willing to pay for the brand, the design, and the ecosystem. Here's how you can buy Apple stock even with limited money. Apple costs around $190 per share, but through fractional investing you can buy $10 or $25 worth of Apple stock. The billionaires who own millions of shares started with their first share too. When you buy Apple, you're buying a piece of the most valuable company in the world. You're getting exposure to innovations in artificial intelligence, augmented reality, and future technologies we can't even imagine yet. The second stock that wealthy investors can't get enough of is Microsoft. While most people think of Microsoft as the Windows and Office company, billionaire investors see something much bigger. Microsoft has transformed into a cloud computing powerhouse. Their Azure cloud platform is growing at over 25% per year and generates tens of billions in revenue. But here's what makes wealthy investors excited. Cloud computing has incredible profit margins. Once Microsoft builds the infrastructure, each additional customer adds almost pure profit. The company also has what I call business addiction revenue. Every company in the world uses Microsoft Office, Windows, or other Microsoft products. These aren't one-time purchases. They're subscriptions that businesses pay month after month, year after year. Microsoft has over 1.3 billion people paying them regularly. But the real reason billionaires love Microsoft is artificial intelligence. Microsoft invested $10 billion in OpenAI, the company behind ChatGPT. They're integrating AI into every Microsoft product, creating a massive competitive advantage. Ray Dalio's hedge fund holds billions of dollars worth of Microsoft stock. Tech billionaires like Bill Gates obviously have massive Microsoft holdings. Even traditional value investors are loading up on Microsoft because of its predictable cash flows. Here's what wealthy investors understand about Microsoft that others miss. This company has pricing power. When Microsoft raises prices on Office 365 or Azure services, businesses pay because they can't operate without these tools. That pricing power translates directly into higher profits and higher stock prices. You can start building your Microsoft position with just $20 or $30. The current stock price is around $380. But fractional shares let you own a piece of this business empire regardless of your budget. When you own Microsoft, you're betting on the future of business technology, artificial intelligence, and cloud computing. These are trends that will drive growth for decades. The third stock that appears in almost every billionaire portfolio is Amazon. But wealthy investors aren't buying Amazon because they love fast shipping. They're buying it because Amazon has built multiple monopoly-like businesses. Let's break down why billionaires are obsessed with Amazon. First, Amazon Web Services AWS powers about 30% of the internet. Netflix, Airbnb, and millions of other companies pay Amazon billions of dollars to host their websites and applications. AWS has profit margins over 30%, meaning Amazon keeps 30 cents of every dollar in profit. Second, Amazon's retail business creates a self-reinforcing cycle. More customers attract more sellers. More sellers create better prices and selection. Better prices and selection attract more customers. This flywheel effect makes Amazon almost impossible to compete against. Third, Amazon Prime has over 200 million subscribers paying $139 per year. It's over $28 billion in guaranteed annual revenue before Amazon sells a single product. Prime members spend twice as much as non-Prime members, creating incredible customer loyalty. Jeff Bezos obviously has massive Amazon holdings, but so do other billionaires who understand the company's competitive advantages. Hedge funds and institutional investors have poured hundreds of billions into Amazon stock. Here's what wealthy investors see that others don't. Amazon is not just an e-commerce company. It's becoming the infrastructure of modern business. They provide cloud computing, logistics, advertising, and dozens of other services that businesses depend on. Amazon also has incredible international expansion opportunities. While they dominate in the United States, they're still growing rapidly in Europe, Asia, and other markets. The total addressable market for Amazon services is measured in trillions of dollars. The stock currently trades around $145 per share, but you can buy fractional shares starting with just $15 or $20. When you buy Amazon, you're buying a piece of the company that's reshaping global commerce. Wealthy investors hold Amazon for decades because they understand that this company will likely be even more dominant in 10 or 20 years than it is today. The fourth stock that has captured the attention of every major investor is Nvidia. This is the company that's literally powering the artificial intelligence revolution, and billionaires are betting big on its future. Here's why wealthy investors are pouring money into Nvidia. The company makes the chips that power AI systems like ChatGPT, Google's AI, and every other major artificial intelligence platform. When companies want to build AI systems, they need NVDA chips. There's essentially no competition for the most advanced AI chips. The numbers are staggering. NVIDIA's revenue has grown from $27 billion to over $120 billion in just 2 years. Their profit margins are over 70%, meaning they keep 70 cents of every dollar as profit. This is the kind of explosive growth that creates massive wealth for investors. But here's what makes billionaire investors really excited about Nvidia. They're at the beginning of a massive technology shift. Every company in the world is trying to implement artificial intelligence. Governments are building AI systems. Cars are becoming AI-powered. The demand for NVIDIA's chips is growing exponentially. Major hedge funds and billionaire investors have made Nvidia one of their largest holdings. The company has become essential infrastructure for the digital economy, just like oil was essential for the industrial economy. Nvidia also benefits from what economists call network effects. The more developers use NVIDIA's chips and software, the better NVIDIA's ecosystem becomes. This creates a competitive moat that gets stronger over time. The stock has been volatile, trading anywhere from $200 to over $800 per share. But wealthy investors focus on the long-term trend rather than short-term price movements. They understand that AI is still in its early stages, and Nvidia is positioned to benefit from decades of growth. You can start building your Nvidia position with fractional shares, investing as little as $25 or $50. When you buy Nvidia, you're betting on artificial intelligence, autonomous vehicles, robotics, and technologies that haven't been invented yet. Billionaire investors view Nvidia as a picks and shovels play. Instead of trying to guess which AI companies will win, they're investing in the company that provides essential tools to all AI companies. The fifth stock that wealthy investors consistently own might surprise you. Berkshire Hathaway, Warren Buffett's company. This is essentially a way to invest alongside the greatest investor in history. Here's why billionaires buy Berkshire Hathaway, even though they could pick stocks themselves. Berkshire owns pieces of over 40 different companies, including massive stakes in Apple, American Express, Coca-Cola, and Bank of America. When you buy Berkshire, you're getting instant diversification across dozens of proven businesses. But Berkshire isn't just a collection of stocks. The company owns entire businesses outright, including Geico Insurance, BNSF Railway, and Precision Castparts. These businesses generate billions in cash flow that Warren Buffett reinvests into new opportunities. Warren Buffett has compounded money at nearly 20% per year for over 50 years. That means $10,000 invested in Berkshire in 1970 would be worth over $30 million today. Even wealthy investors who could hire their own investment. Teams choose to invest with Buffett because of his incredible track record. Here's what makes Berkshire special for wealthy investors. It's run like a family business focused on long-term wealth creation. Buffett and his partner Charlie Munger think in decades, not quarters. Are we not trying to beat the market every year? They are trying to compound wealth over generations. Berkshire also provides protection during market crashes. The company holds over $160 billion in cash and bonds, ready to make massive investments when opportunities arise. During the 2008 financial crisis and 2020 pandemic, Berkshire was able to make billions in profitable investments, while other investors were panicking. The Class B shares, BRK, trade around $400 per share. But fractional investing lets you start with much smaller amounts. When you buy Berkshire Hathaway, you're essentially hiring Warren Buffett to manage part of your money. Many billionaires use Berkshire as their core holding, a stable foundation for their investment portfolio. They might make other investments and take risks with part of their money, but they keep a significant portion in Berkshire for steady long-term growth. Now that you understand each individual stock, let me explain why wealthy investors often own all five together. This isn't coincidence. It's strategic portfolio construction. These five stocks provide exposure to the most important trends shaping our economy. Apple gives you consumer technology and brand loyalty. Microsoft provides business software and cloud computing. Amazon covers e-commerce and internet infrastructure. Nvidia captures artificial intelligence and advanced computing. Berkshire Hathaway adds diversification and time-tested value investing. Together, these stocks create what I call future-proof wealth. No matter how technology evolves, these companies are positioned to benefit. If artificial intelligence becomes huge, Nvidia wins. If cloud computing grows, Microsoft and Amazon win. If consumers keep buying premium products, Apple wins. If the overall economy grows, Berkshire wins. The wealthy also understand something about correlation and risk management. While these stocks sometimes move together, they often perform differently based on market conditions. During growth periods, Nvidia and Amazon might outperform. During uncertain times, Berkshire and Microsoft might be more stable. This combination also provides incredible dividend growth potential. Apple, Microsoft, and Berkshire all pay growing dividends. Over time, these dividend payments can become a significant source of passive income, which is exactly what wealthy investors want, their money working for them without any effort. Here is the key insight that separates wealthy investors from everyone else. They're not looking for the next hot stock that might double in a year. They're looking for companies that can compound wealth over decades. These five stocks have proven they can do exactly that. Now let me show you exactly how to implement this strategy, even if you're starting with just $100 or $200. The wealthy use what is called position sizing. They do and put equal amounts into each stock. Based on analysis of billionaire portfolios, here's the optimal allocation for these 5 stocks. Apple. 25% of your investment money. This should be your largest single holding because of Apple's stability and growth potential. Microsoft. 20% of your investment money. Strong business fundamentals with excellent long-term prospects. Berkshire Hathaway. 20% of your investment money. This provides diversification and Warren Buffett's expertise. Amazon. 20% of your investment money. High growth potential, but slightly more volatile. Nvidia. 15% of your investment money. Highest growth potential, but also highest risk. Here's how this works with real numbers. If you have $500 to invest, Apple, $125 Microsoft, $100 Berkshire, $100 Amazon, $100 Nvidia, $75 if you're starting with just $100, Apple, $25, Microsoft, $20 Berkshire, $20 Amazon, $20 Nvidia, $15. The beauty of fractional investing is that you can implement this exact strategy regardless of your budget. You're buying the same companies that billionaires own, just in smaller amounts? Here's the implementation strategy wealthy investors use. They don't buy all 5 stocks at once. Instead, they use dollar cost averaging, investing the same amount each month, and gradually building their positions over time. Month 1. Buy Apple and Microsoft. Month 2. Add Berkshire and Amazon. Month 3. Add Nvidia and increase. Apple. Month 4. Rebalance and add 2 smallest positions. This approach reduces timing risk and helps you build positions during both market ups and downs. Let me show you what this strategy could look like over time with realistic projections. I'm using conservative estimates based on historical performance, not pie-in-the-sky promises. If you invest $200 per month in these 5 stocks, year 1, $2,400 invested gives portfolio value, approximately $2,650. Year 3, $7,200 invested gives portfolio value, approximately $8,900. Year 5, $12,000 invested gives portfolio value, approximately $16,200. Year sure, $1,410 invested, portfolio value, approximately $1,3,500. Year are sure, $4,410. Invested gives portfolio value, approximately $110,000. These projections assume a 10% annual return, which is conservative based on these companies' historical performance. The wealthy think in decades, not months, which is why this strategy is so powerful. But here's what makes this even more exciting. As your income grows throughout your career, you can increase your monthly investments. If you start with $200 per month, but increase it to $500 per month after 5 years, the numbers become much larger. The key insight from wealthy investors is that time and consistency matter more than perfect timing or large initial amounts. Someone who invests $200 per month for 20 years will likely have more wealth than someone who waits 10 years and then invests $500 per month. Here's the psychological advantage of owning these specific stocks. Because they're proven companies with long track records, you're less likely to panic and sell during market downturns. When you own speculative stocks and they drop 30%, you might get scared and sell. When Apple or Microsoft drops 30%, you know it's probably a buying opportunity. Wealthy investors use market volatility to their advantage by continuing to invest during downturns. Some of their best returns have come from buying these quality stocks when everyone else was selling in fear. Before we wrap up, let me share the biggest mistakes I see people make when trying to copy wealthy investors' strategies. Mistake number 1. Trying to time the market. Wealthy investors don't try to predict when stocks will go up or down. They invest consistently regardless of market conditions. If you wait for the perfect time to buy these stocks, you'll likely wait forever. Mistake number 2. Getting distracted by hot trends. Every few months, there's a new investment craze. Cryptocurrency, meme stocks, SPACs. Wealthy investors ignore these distractions and stick to proven businesses that generate real profits. Mistake number 3. Panic selling during downturns. All of these stocks will experience significant drops at some point. In 2022, even Apple fell over 25% from its highs. Wealthy investors either held their positions or bought more during the decline. Mistake number 4. Not starting because the amount seems small. I've seen people refuse to invest $50 because it won't make a difference. But wealthy investors understand that every fortune starts with the first investment. The habits you build with small amounts will serve you when you have larger amounts to invest. Mistake number 5. Constantly checking prices and making emotional decisions. Wealthy investors typically review their portfolios monthly or quarterly, not daily. Constant monitoring leads to emotional decision-making and poor returns. The wealthy have a saying, "Time in the market beats timing the market." They would rather be invested in great companies for long periods than try to jump in and out at the perfect moments. Here's exactly what you need to do after watching this video to start building wealth like the ultra-rich. Step 1. Choose your investment platform. I recommend Fidelity, Charles Schwab, or Vanguard for beginners. All three offer commission-free stock trades and fractional investing. Step 2. Open your account and fund it with whatever amount you can invest consistently each month. Even $50 per month is enough to start implementing this strategy. Step 3. Buy your first positions using the allocation percentages I shared. Start with Apple and Microsoft since they're the most stable, then add the others over the following months. Step 4. Set up automatic investments. This is crucial. You want to remove emotion and timing from the equation. Most platforms let you automatically invest a set amount each month. Step 5. Review your portfolio monthly but resist the urge to make frequent changes. Wealthy investors are patient and let compound growth work its magic. Step 6. Increase your investments as your income grows. Every raise, every side hustle, every bonus should translate into higher monthly investments in these wealth-building stocks. Remember, you're not trying to get rich quick. You're trying to get rich for sure. This strategy has worked for decades because it's based on owning pieces of incredible businesses, not gambling on market movements. The wealthy didn't become wealthy by accident. They became wealthy by consistently investing in great companies and letting time do the heavy lifting. Now, you know their exact playbook. Let me leave you with this final thought. Every single day you wait to start investing is a day that you're not building wealth. The wealthy understand that their biggest advantage is on having more money to invest. It's starting earlier and staying consistent longer. These 5 stocks, Apple, Microsoft, Amazon, Nvidia, and Berkshire Hathaway, represent the best businesses in the world. When you own them, you're partnering with companies that generate hundreds of billions in revenue and profits each year. You don't need to be rich to invest like the rich. You just need to start. Your future self will thank you for the decision you make today. If this video helped you understand how wealthy people really invest their money, hit that like button and subscribe to Budget and Beyond for more wealth-building strategies that actually work. Drop a comment below and tell me which of these 5 stocks you're most excited to buy first. I read every comment, and I'm here to help you succeed. Remember, save smart, invest smarter, live better. I'll see you in the next video.